Happy Friday, traders. This is Fawad Razak Zada, market analyst for City Index. Today is the 30th of May. So, China has totally violated the trade agreement, according to Trump. When he posted that, we saw initial drop in risk assets. Equity indices dropped. We saw the dollar yen drop. Similar moves were seen in other yen crosses, but markets have bounced back since. So heading towards the weekend, markets are kind of flattish. Investors are not sure whether to pile in on the long side or take profit and assess the situation in the week ahead when we have lots of economic data from the US and a rate decision or two from major central banks, including the ECB and the Bank of Canada, I believe. The S&P 500 here has been consolidating in the last few days after running into a bit of resistance just below the 6,000 level, which is a psychologically important level. And this area was previously a major support area before it broke down during that big drop we saw earlier this year. So naturally, the market is pausing for a breather here. This is too early to say that the trend has turned bearish once again. It could just be a pause before we see more gains. But do watch for a possible breakdown of this trend line that you can see on the daily chart. If we go below the trend line, that could potentially trigger some stops leading to a potential drop. But there are lots of support levels on the way down, including the 200-day moving average, which comes in at around 5,785-ish, which was this high here as well. So that area is now going to be an important support zone to watch on a potential pullback. Below that, we have the shaded blue region where the market had previously found support and resistance. So now that we're above it, this area could potentially turn into support if we get a drop. On the upside, resistance, as I mentioned, 6,000 is a key level to watch now. Above that, there's nothing significant until the February 2025 all-time high. In the FX space, the dollar yen has bounced back from its overnight lows and is now trading flat following yesterday's reversal when it created this inverted hammer candle on the daily chart. We did have some overnight news from Japan where CPI inflation came in hotter than expected, which raised the probability of a further interest rate increase from the Bank of Japan. However, we haven't seen a significant downside follow-through, not yet anyway, as price has now turned flat on the day. Will the trend resume lower is the key question. Perhaps investors are just waiting to see the release of key economic data from the US next week. But as far as the Japanese yen itself is concerned, well, bond yields are on the rise, and that's what's been supporting the Japanese yen in recent days. However, today it looks like the selling has paused for now. Key level to watch on the downside is at around 143.10 area, marking the high of this candle where previously the breakout took place. It was the last resistance prior to the breakout, so that level remains exposed for a potential retest from above. Below that, we have 142. So this area between 142 to 143.10 is key support. Below that, things will get really interesting because we don't have anything significant then until 140. 140 being a very important long-term support area, as you can see. If we get to this area in the coming days or weeks, we could potentially see increased volatility in all Japanese yen currency crosses. But with regards to this pair, we will see if it will break below this area this time of asking, or whether support will hold there once again. But we'll cross that bridge if and when we get there. For now, the area I mentioned earlier is the key support zone to watch. In terms of resistance levels to watch, well, this level at 144.80 is an important level because that level was the last low prior to the last rally that ultimately failed. That level has now turned into resistance, at least on a daily closing basis. So below that, the short-term part of this resistance remains to the downside for the dollar yen. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.